All right, good morning, good morning. Thank you guys so much for tuning into today's live stream. It is June 24th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. So for today, we don't necessarily have any exciting news besides the fact that Jerome Powell is going to testify here at 9 a.m. Central Time. CB consumer confidence. Here as well. But yeah, not really much. Nothing exciting. I could tell you that yesterday there was supposed to be a ceasefire according to President Donald Trump, but the fact that literally like an hour after he announces the ceasefire, Israel proceeds to fire missiles at Iran is kind of it's kind of funny, but or it's not a laughing matter, but yeah. So this whole war is still taking place. I'm not too sure what they're going to eventually do, but yeah. So there's that. Market, I guess they like this news. Whenever we opened up yesterday here at 5 p.m. Central Time, I believe that was around the same time where it stated that we were going to have like a ceasefire or so. But I mean, we continue to expand higher here. We took out previous day high, and we did take out previous week's high here as well. And so, kind of retracing back to the daily time frame here, I do want to point out that yesterday's daily candle here, the way that we closed on this daily candle, to me, the way that I interpret it is that we should most likely take out the daily high, right? Let's just, this is the daily candle here, right? So, right here. And with the way that we closed here on this daily candle, the easiest assumption that you can make is that we should take out the daily high. Right here, that's the daily objective. So for me, coming into today, I wanted to see us take out daily high. And not only that, but I do want to draw your attention towards the 2-day candles here as well. So notice that we also closed here on this 2-day candle yesterday. And I want to mention that with the way that we closed here on this daily candle, or I wouldn't say daily candle, 2-day candle, it suggested to me that we should most likely take out that 2-day high, right? That's the easiest objective. That's after we take out the 2-day high, I don't really have anything to do after that. But for me, I wanted to see us take out the 2-day high. And so knowing that I'm going to be bullish for the next two days, I would want to, align myself with this bullish order flow, right? And so the 2-day high is actually this high right here. And notice how this daily candle here, yesterday's daily candle, has its high is right here. And I'll make this a darker green line. So notice how the 2-day high, actually let me just make this a completely different color. So notice how the 2-day high is different from the daily high. However, both time frames are suggesting the same idea. They are suggesting the idea of higher prices. So I was actually wanting to see prices, retrace back into this inefficiency where I could take my entry, take out the daily high. After we take out the daily high, we should expand higher towards the 2-day high. However, as you guys saw, immediately as soon as we opened up here in today's candle at 5 p.m. Central Time, I wasn't given an opportunity to, take that move higher. And so for, I guess, today, I'm going to utilize the intraday time frames, such as the 4-hour, such as the 6-hour, the 8-hour, the 10-hour time frames for a intraday bias, right? I can't utilize the daily time frame anymore because the daily time frame, its objective has already been completed, same as the 2-day objective. And yeah, so that's kind of where I'm leaning towards today. For the morning, I would utilize the 4-hour time frame and the 8-hour time frame for a morning objective, right? I don't necessarily have. I would wait until those two time frames close first, the 4-hour and the 8-hour, before I really declare a narrative. But yeah, so I'm just gonna wait until the 8-hour and the 4-hour closes for a morning objective. And yeah, so that's kind of the idea of me pivoting from different time frames, right? So the fact that I was able to go from the 2-day time frame onto the daily, onto the 4-hour, I'm utilizing all of the time frames. I'm utilizing multiple time frames, right? I'm not just sticking to one time frame, and I'm able to do that because prices is fractal, time is fractal. But you do have to understand that a daily objective is not going to be the same as a weekly objective. It's like comparing a penny and a nickel. They have the same, their job is to be able to purchase things, right? A penny and a nickel. Their job is to act as a store of value. Their job is to act as a medium of exchange. They are treated as accounts, ways to account for value. However, a penny can only get you so far as compared to a nickel, where it could get you 5 times that, right? So the same thing kind of applies to time frames here as well. A 10-hour candle can get you more, has more time to be, I guess, created as compared to like a 4-hour candle, or comparing a 4-hour candle to an hourly candle. Within 4 hours, there's more range that occurs compared to maybe like a 1-minute candle, where 1-minute candles typically don't have the same amount of range, and I guess you could say purchasing power if you're doing this in comparison with the penny and nickel analogy, right? So kind of be nimble here. Like I said, you don't want to be so zoomed in. Yeah, so I'm gonna give prices about 18 minutes or so for it to do its thing. For right now, like I said, I am not going to force an idea into the markets. Yeah, I think here I could probably, I'm just gonna go into my pros and cons here with you guys, and just do a little recap of some of the pros and cons from the previous week that I can carry over onto this week. So far for my 10K trading journey though, however, with you guys, I have only taken 2 trades on the account. And yeah, so alright, so what I should continue doing. Pros and cons from the week of June 16th to June 20th. The first thing is to be, or not to be, but to take consistent setups. For me to do that, I have to require 3 things every single time I take or I execute, right? I have to be able to identify a higher time frame objective. I have to be able to identify a model, and I have to be able to identify a entry pattern. So it's almost like what I just showed you guys with the two day higher time frame objective, and the way that I align myself with that is the daily model, but we just didn't have a entry pattern. Those 3 components are things that I look for every single time before I execute. There are other factors where there are other factors such as SMT, where ES is trading relative to NQ, but those are the 3 core values that I really kind of look for. And so yeah, that's basically the first pro. The second here is to make sure that the fair value gap that I'm treating as a entry pattern could be rebalanced. There are differences between a gap that could be treated as a entry pattern and a breakaway gap. Breakaway gaps are gaps that should not be rebalanced, meaning they shouldn't, this is a good example here. This gap right here. Notice how there wasn't even an opportunity for prices to trade back into here. We just continue to climb higher after this candle right here, right? So that, to me, this gap right now should be treated as a breakaway gap, and it is treated as a breakaway gap. And to objectively know when to treat a gap as a breakaway gap and when to not treat it as a breakaway gap, it's pretty simple. So fair value gaps are created in, it takes 3 candles to create a fair value gap, right? So let me point out so this is your first candle, right? Where that blue line is pointing it. That's your second candle, and that's your third candle. Let me make it 3 different colors so that you guys can see it a little bit clearer. Okay, so the blue line is the first candle, pink line is the second candle, kind of orangish line is the third candle. So notice how the third candle, this is where we closed. That's where we closed. That red, let me make this actually dark red so that dark red is where we closed on the third candle. And this is the high of the second candle, which I'll make a purple color. So because so keep in mind, you probably want to note this, but the fact that the red maroon line closed above the purple line means that we have to treat this gap as a breakaway gap. Sometimes there will be times where this occurs and prices will rebalance the inefficiency, but that's, that's okay. It's just most of the time, 51% of the time, right? This is going to occur where if we close above, if the third candle closes above the second candle's high, then this gap has to be treated as a breakaway gap. And I carry over this concept over to whenever I execute. So whenever I'm executing, I look closely of how we close, and I compare that to the second candle's high in a case where I'm in a case where I'm bullish, vice versa if you're in bearish conditions. But yeah, so I use this concept to know when a fair value gap could be used as a entry pattern. Sometimes you shouldn't even enter there. Sometimes there's no fair value gap for you to use, and to treat as a entry pattern, right? So that's the second pro. The third is knowing when to pivot. I kind of showed you guys an example of what it means to pivot from different time frames, right? The fact that you're pivoting means that you can't utilize some specific time frames. Like for me today, I can't use the daily time frame. I can't use the 2-day time frame because their objectives has been completed, right? The daily candle, like I told you guys, the daily candle, its objective was the daily high, which is right here. After we trade past the daily high, I'm not forcing anything else to happen onto the daily time frame. I don't care if we continue to expand higher or if we continue or if we reverse. That to me, I don't really care. I'm only aiming for the range of the open to the daily high, and because the daily high is the objective, right? So it's a small amount of range, right? Like that box is super small, but the fact that you can leverage it is like extremely impactful, right? But yeah, so know when to pivot. If there's going to be like for me, the lowest time frame I'll go for a higher time frame objective would be the 15-minute time frame. Any time frames below that, I would only use for entry patterns. But if there's no time frame that I can use as a objective, then the only thing for me to do is to wait for candles to close, right? Every candle, it will tell you, its name will tell you when a candle will close. 8-hourly candle, it will take 1 hour. It will take 1 hour for that candle to close. So wait for 1 hour and do this. Apply the same concept to every single time frame, right? The 4-hour candle, it takes 4 hours for a 4-hour candle to close, or it takes 4 hours for another 4-hour candle creation. So yeah, that's third. And last but not least, it's paying close attention to SMT. I didn't really go over this yet, but yeah, here you guys can see that. Emily, where are you going? What, Matt? Yeah. When are you getting checked out? Oh, for school? Yeah. For your physical? Don't you need to drink an energy drink before you go? Because what if you get what if they say that you're diagnosed with brain rot syndrome?
What?
Yeah, drink that. That's energy drink. Not energy drink, sorry. It's electrolyte drink. It's gonna keep you strong. It says body odor too, so it's gonna fight off against your body odor.
Bro.
It literally says that's the name.
That's body armor.
Just kidding. Bro, that's literally my pants, bro.
It is?
You see? Yeah, that's literally my pants.
It keeps dropping down, but it's okay because my shirt is long. I need these pants to cover my shoes because or else my shoes look too big on me.
Are you about to go right now?
Yeah. Okay.
Alright, peace out, Emily.
When it's done, deodorant.
I didn't even say anything about you being Tui, bro. I was just kidding. Alright, so SMT is whenever I say indicator, you guys are probably thinking of like VWAP, stuff like that. I guess it could be treated as an indicator. I guess you could treat it as an indicator, but it's a price action indicator, meaning that prices is the indicator. So notice how there's a high that's relatively the same as on NQ and ES, and the fact that here both of the indices, both of these assets have taken out this high. That means there is no SMT. SMT indicates when there's been manipulation in the markets, right? These two assets, they should be correlated with one another, meaning they should kind of be flowing in the same direction. And yeah, so for me, is pay close attention to SMT. If there is SMT, then there's a possibility of a reversal. If there's no SMT, then there's higher chances of a continuation. To really just sum things up here, some improvements here are just to be consistent, require the 3 components that I always look for, right? Higher time frame objective, entry or model, entry pattern. Those are the 3 things that I look for. Second, pay close attention to SMT before and during a trade. Whenever I'm in a trade, I'm always watching the relationship between ES and NQ at the target highs or lows that I'm kind of aiming for, right? If ES takes out the target high that and NQ hasn't taken out that high yet, then I would consider moving my stops to break even closing the trade. But yeah, that's that. Third, be relaxed, be a little bit, be patient. Don't force things to happen, right? For me, I've gotten a lot better at doing this, but I recently just started my own personal capital, and it's a little bit different than using prop firms. I think it's like kind of like a mental shift again, and it's like kind of exciting, where I don't want things to be exciting. I just want to execute when I should be executing, and I should not be executing when I should be executing, right? That's kind of where I want to be whenever I am executing. It's just to be patient and just be calm. Fourth, last but not least, is to watch closely.
Bye, Matt. Bye, Kim.
For me, is like I said, I want to watch closely between U.S., Israel, and Iran, and what their situation is right now. That's basically all the pros and cons for me. We have about 5 minutes left until we close here on these time frames. So the 4-hour candle is about to close within 4 minutes or so. Same thing on the 8-hour time frame. Okay, so let's apply that fair value gap theory to this 8-hour time frame, right? Because it looks like we are most likely going to create this fair value gap, right? And let's watch how we create this fair value gap. Is the third candle's closing price going to be above or below the second candle's high? So if this green line is above the red line, then you have to treat this fair value gap as a breakaway gap. But if the green line is below the red line, then you can treat this fair value gap as a gap that gets rebalanced. So watch closely of the closing price. The red line, like I said, is the second candle's high. Watch closely of the closure here. With the way that we're closing, it looks like we're closing on the 4-hour candle. I don't necessarily have a bias. Same thing on this hourly candle too. The hourly candle, 4-hour candle, they're both closing pretty indecisively. right? I don't think I'm going to be executing anything coming into the 10 a.m. Open, but it is like nice. Just watch and see what happens. All right, so 2 minutes left until the closure. Where's the tag on? All right, so it looks like we are probably going to close below the red line here on the 8 hour time frame. So watch that very closely. Watch and see how we close.
Yeah, bye Matt, bye Kim.
It is looking like we are most likely going to rebalance this 8 hour inefficiency. Here's the closure. 5 seconds left. 3, 2, 1. There's the closure. So it looks to me, or not even it looks like, we closed the third candle's closing price is below the second candle's high. That green line is below the red line. That means you have to treat this inefficiency here on the 8 hour time frame as a gap that gets rebalanced. It's not like you're forcing the idea of it getting rebalanced, but you have to respect that it could get rebalanced. So watch closely, yeah. So like I said, this fair value gap here on the 8 hour time frame could be rebalanced. I don't necessarily have a yeah. I knew I was gonna, if I zoomed into the 15-minute time frame, it's gonna look like consolidation, which it looks like consolidation. Yeah, here I'm not gonna really force anything. Like I expected, the hourly candle, the way that we closed, it's too unclear, right? It's not really decisive. It's not a decisive closure. It's not telling me that, hey, we should take out the hourly high, and it's not telling me that we should take out the hourly low. Both ideas are out the picture here, so yeah, I'm not gonna force anything. I think that's pretty much gonna wrap it up for today's live stream, to be honest. I don't really have anything else for me to include into today's live stream. Oh, actually I do. I want to go over at least one trade with you guys during February. Peter? What? Oh. All right. Alright, so February, where are we at here? Alright, so this is the first trade that I took on February. And the idea of this setup is that the way that we closed here on this 3-day time frame, the 3-day candle, is bullish. We should take out the 3-day high here. So it's like coming into today, right? Where I told you guys where with the 2-day candle closure, it's bullish. And so in this setup, I'm not using the 2-day time frame. I'm using the 3-day time frame. And I'm going to be bullish for the 3-day for the next 3 days. So that's my higher time frame objective. How do I align myself with this order flow? Well, this daily high, this daily candle is suggesting the idea of higher prices. It's suggesting the idea that, hey, we should take out this daily high. After we take out the daily high, we should expand higher towards the 3-day high. And so that's kind of the idea coming to this setup. And okay, I don't know why. Okay, so I actually don't know if we end up taking out the previous day high or not, but it appears to me that the entry pattern for this setup was based off of the 10-hour fair value gap. So the 10-hour fair value gap is what I use to target previous day high. So once we retrace back into this inefficiency, I take my entry and I'm targeting the daily high and I'm targeting the 3-day high. So I have a higher time frame objective, I have a model, and I have an entry pattern. Let's see here. I think for the next setup, it is based off of, notice how the 1 hour, 4 hour, 8 hour candles are closing. All 3 time frames are suggesting higher prices. Why should we be expanding higher? We should expand higher to retrace back into the premium of the 4-hour daily range. So higher time frame objective is for us to retrace back into the premium level of the daily range. And the way that I align myself with that higher time frame order flow is based off of the 4-hour candle, 6-hour candle, and 8-hour candle. Entry pattern is this 15-minute fair value gap because my model is on the hourly time frame, right? So notice how the hourly high is the same high as the 4-hour high and the 8-hour high. That means that I can treat instead of treating the 8-hour time frame as my model, I'm scoping onto the 1-hour time frame and treating that time frame as my model. So going from the hourly time frame, I use the 15-minute time frame for an entry pattern. And here you can see that we rebalanced into this 15-minute fair value gap. We respect the inefficiency and we expanded higher towards the 4-hour/8-hour high and hourly high too. So pretty nice setup, right? The higher time frame order flow here was for us to retrace back into the premium of the daily range. Notice how all of these setups here, they have the same they all have the same idea, which is, or not the same ideas, but they all have the same structure. They have a higher time frame objective, they have a model, have an entry pattern. I think coming into this one, I state that, okay, daily objective has been completed. You must use intraday time frames for bias. So I'm pivoting here. I'm pivoting from the fact that We completed the daily objective already, so I have to use the intraday time frames. So 30-minute, hourly, 4-hour, power of 3 are all suggesting higher prices. I can anticipate for prices to take out the respective highs within the next 30 minutes. So instead of, same idea of scope here, instead of treating it as a 4-hour model, or I guess a 4-hour higher time frame objective, I'm treating the 30-minute time frame as my higher time frame objective, because the 30-minute high is the same high as the 4-hour high, and the 30-minute candle suggests higher prices. So the way that I align myself with this order flow is based off of this 15-minute candle here, and this 15-minute candle suggests the idea of higher prices as well. The 15-minute high is the 15-minute model's objective, and it's telling me that we should expand higher towards the 30-minute high. And notice how the 15-minute candle was created. We rebalanced into a 15-minute BISI and priced higher. Entry pattern was this 2-minute fair value gap. We retraced back into this fair value gap and expanded higher. Here you can zoom in into the 1-minute time frame, but yeah, we retrace back into this 2-minute fair value gap, expand towards the 15-minute high. After we take out the 15-minute high, we expanded higher towards the 30-minute high. That's going to be all of the recaps that I'm going to be doing for you guys here today. What I want to leave you guys here with is watch closely. After we rebalance this 8-hour fair value gap, I don't want to utilize the 8-hour time frames anymore, right? After we rebalance the inefficiency, I don't really care what we do on the 8-hour time frame. And yeah, so just watch really closely on if we do rebalance it, and like I said, pivot onto different time frames if you need to. Pivot from the 15-minute, the 30-minute, the hour, the 2-hour, the 4-hour, the 6-hour, the 8-hour, the 10-hour, all of these time frames. And yeah, that's gonna wrap it up for today's live stream. Thank you guys so much for tuning in, and until next time, be safe.